All right. Welcome. Peace and blessings, everybody. Welcome to Sauce Factory Wednesdays. And as you know, we got what you need. All right. So we're gonna be going over market retracements, how not to get caught up in a single direction, recognizing the change of the direction of trend, understanding reversal days, overextension in markets, how to recognize the signs of it, and how can you take advantage of that said trend. Okay. And on top of that, if you have any questions at any moment, please feel free to ask. You can unmute, ask your question, and we'll get to it. If you missed something that I said, don't worry, just ask. I'll go back. We'll, talk about it, break it down, make sure you get a clear understanding. So we make sure everybody on the same page here. Without further ado, let's catch this, right? So looking at it for the last 3 days, right? From Monday, you seen this the Tuesday drop, right? Here we go, Monday. Remember, like I always say, let's break it down for the week, and then we're gonna go over what typically happened here. So let's go back out to the week candle, blow the market out real quick. Boom. As y'all know, reason why we do our technicals like this, we mark previous week high, yeah, and then we go week low, right? Boom. Why is that? So we can understand the range of the market. Okay. So once we had that pretty much marked out, we see what happened here, right? Let's go down to the 1 hour chart. We're going to catch a couple of candles and then we just mark our ranges from there. So opening range, look what happened Sunday. Boom, market opens back up. Try to get to the highs, but it failed to get there. And as you see, we start falling down. We had this little OB form here, back from way over here from that volume imbalance, right? So we had a nice little volume imbalance from last week. Well, that's what was trading in. Once they balance price out, guess what? They start dropping. We had a change of character here. Algo pointed it out last week. They took out that market structure. Then here they did a break of structure. Boom. That led into the Tuesday market, right? So here's was our Monday low. That template for that. Once price came over on Tuesday, took out Monday low. All right. Put in a nice little Tuesday low here. Boom. Now, most traders would think like, okay, we should get a minor pullback. This should be our lower high here, and then we should dump, right? But that's not the case here, right? So this is the opening coming into the close of the New York opening of the Asian market. So we looking for it. Most traders gonna be looking for a dump to the downside. Like, all right, that's the pullback. Where's my dump at? Right? Because some people smart, they said, oh, well, let me go back up to the top. Last swing high was here, right? And I'm going to run my fibs. Like, great. We did this overnight. Well, you'll be looking like, okay, where's my reversal point? Most people say, oh, I'm here. Depends on where you drew your fibs from, right? If you drew it from the top, that's 38% retracement, but you come and bring it down here to this swing point here. You like, okay, that's the 50%. You see them coming down because you're trying to make it make sense. You about to pull a muscle, right? So you trying to make it make sense. You say, oh, that's cool. We got a nice fair value gap here on a 1 hour. They're probably going to trade into that, then reverse. And I'm going to load the boat up here and I'm going to take it down to the dirt, right? And they're going to sweep the lows. Win for me. But that's not the case, right? So this is when our oscillators come into play. One, understanding the market range from Monday to Tuesday, now in Wednesday. All right. If you look from this high of Monday, right? That's Monday high. Mark that for you. All right, Monday high. What we looking at? See what time it came in. It's 9 o'clock. Technically, Monday hit at midnight, but this was the high of the day. We're not counting Sunday. We looking at Monday price action. This is our low. This is our high. Recognize the average true range of the market. What did it move per day? This day happened to move $194.25, right? This is the NASDAQ 100, by the way, futures market. So we'll mark out what's our Tuesday high. Technically, this is the high of Tuesday right here. This is the highest point Tuesday got in the London market. Okay, great. Boom. We already got our low. Once again, you're gonna measure it out. Say, okay, cool. Monday was an average day. Tuesday we had some news events, a couple of red folders, caused the market to go into massive sell off. Plus we had a pullback on Nvidia. Apple's bearish that day too as well. Microsoft was doing what it does, right? This day moved $310. Well, that's a very large movement and a range expansion from Monday. Monday was a bearish day. Guess what? Tuesday was also a red day. Since we had two red days in a row and an extreme move, this was typical. This was $100 more than it was the day before. So we can expect for a decent sized pullback or rebalance of price. We had straight down action, no form of consolidation. They didn't build no base. Nobody had a chance to buy at any form or at all, any form in this whole downtrend. Nobody had the opportunity to buy. We got to have buys and sells. This is straight red candles from 5 a.m. to pretty much 10 a.m. It was straight bear action. Bear, bear, bear. So the bull started slowly picking it up here. That's what you think you want to say, hey, this is my lower high, and they start trading it back down. But by the time Wednesday roll around, guess what? We got this nice little pivot with pop. Okay, let's go look at our oscillators here. Looking at the algo, the swing, way below the zero line, so it's a squeeze. But look at our MACD too as well. It's at an extreme point. Everything's at an extreme point. We drop down to a 12-minute. You can use the 15. I use the 12. Your preference, right? But go to your intraday time frame. And look, our swing gave us the signal that is extremely oversold. We got the green box here. When you see that green box with the green dot, something magical is going to happen. None but magic, right? We already know the market is overextended. Well, what happens when the market overextended? They got to bring it back into the range and rebalance price. So one person got their way. Well, guess what? They already nice and fed. We've been getting the signals. Boom, boom, boom. We got the crossover on the MACD at 11 o'clock. That set it off, right? Pulling it back up. Got to the zero level. So that was already letting you know right here on the MACD that it was ready to go, right? It was a rough start, but we knew it was ready. From there, they reset the oscillators. You cannot drive it down in one direction all day long. So you cannot get this notion in your head that they're going to drive it down there in one simple direction the whole entire time, leaving all this imbalanced price behind. They had to come back and rebalance price. Okay. Some time throughout the night, throughout the day, they got to rebalance price. Well, since you had a 300-point drop, guess what? They're going to take a little bit longer to rebalance all that price, especially on 1 hour charts. When you have large imbalances on 1 hour charts, they have to bring it back and they're going to probably take a day. So by the time Wednesday roll around, the third day of the New York market, guess what? That was a green day. They finished it up, right? What you have to be mindful of, watch the setup here. So initially, where is I Wednesday low here? Boom. So this is your London low. Got it? Once the market start breaking down, they did a small sweep here for liquidity. They took out the London low. Okay, great. Now this is our new low for the coming into the New York market. They swept the low, wrong price up. What did they balance? This fair value gap here. That's what they target, right? Boop. Came into that gap. FEG, right? So they came into the fair value gap that we have here. Great. Then from there, let me go ahead and box this out so y'all know what that is. Let's go. And I'll take this stand right off. So y'all know exactly what that is. And when y'all want to go back to the video, FEG. Okay. Center. Boom. Let's make it look a little nicer. 20 inside. Boom. There you go. Nah, keep that purple. Text. There we go. All right, there you go. So they came back into this fair value gap here, reacted accordingly, right? And when they did, they ran lows coming into the New York market. So pre-market, this was the pump, right? Pump into the fair value gap. Boom. Now dump. Once again, sweeping liquidity. Well, guess what? This is our new low for Wednesday. This lowest point Wednesday got to. Boosie candle come in. Everybody know what that Boosie candle is. You feel me? Once you get that caution candle indicator, only candle you're gonna get with the algo. Once you see that on the 12-minute time frame and it closed, guess what? It's off and rocking. You get a change of character right here, being called out on the 10 o'clock candle, and boom, straight up rebalance price. Rebalance all this price action from the high hour time frame. Now, back to it, you would have drew your fill from the actual swing high, right? From the Monday high to the Tuesday low. It made a 61% retracement. 618. You already know that's the golden ratio, and we had a strong reaction. So that is a push down, making a slight push up. They want to rebalance this price most likely. And if we don't get new highs here, well, guess what? We're probably going to see they're going to be our official lower high. Then we're going to see some lows, but it's not going to be a lower low until they take out the low from Tuesday. Once they take that low out, then yes, we got some market structure. If not, there's nothing but a higher high, higher low, and we're going to start seeing highs come back from the market recovery. So those are things you pay attention to. One, a large extension in one direction, like a large push, right? The market was overextended in this direction here on the hour time frame, the 12 intraday time frame, 12-minute, right? You can see it on your oscillators. When your oscillators get overextended, guess what? They're going to have to come back to the zero level, retest the zero level. All oscillators must be retested at a certain time. So during the off markets like the Asian market, London market, if you're trading stocks, it's going to happen, or it may take a little bit longer to take place because they're only operating from the New York Open to close, right? So they're going to take a little bit longer to kind of reset, but you operate in the futures market, Forex market, you'll see when they snap back, they're going to happen like over a couple of sessions, like the Asian to the London to the New York Open again. So you're going to get 3 sessions or an entire day of price retracing back to neutral before they make a decision to say, hey, either we're going to pick it up and get over neutral, or we're going to drop the market back down and continue in this direction. Those are things you pay attention to. Always pay attention to the overextension of your oscillators. Make sure you check these oscillators on the intraday time frame and above. At the end of the day, or after it makes one major push, get familiar with the ATR of that ticker that you're trading. If you know the average is 150 to 200 points on the NASDAQ, and then they do a 300, 400 point day or anything above that, you know that's out the blue. 9 out of 10, they're going to pull it back down to earth. So after a day like that, don't look for a continuation. Look for a retracement. That's my opinion. You do what you want, but always look to say like, hey, what's next? If everybody believe it's going to go down, right? Do you really think the market makers who actually trying to make money with this, who actually moving this, gonna let it go down? No, they're gonna shake you out. They want to get you out the way, get you to believe something else, and then they're gonna take advantage of the retail trader because they know you gonna keep your mindset in one direction and we go in the other direction. Then once we convince you to change your mind to go that direction, we're gonna take it back this way. That's how it works. That's the dirty game they play. Okay. So do anybody have any questions on that? Nope. Okay, smooth. Push off. All right. So that was overextension on that. Now let's get to this gold real quick. So Melina, what you got on that gold? What you looking for?
Well, basically, someone mentioned it on the floor, and I just said, they made like a shit ton yesterday and the day before, and I'm kind of like, okay, let me take a look at it. And then I played it a couple times, and I was profitable. And and then I look back, and I'm like, wow, this is on a straight like trajectory to the upside. So I'm kind of like, what should I be looking for? What are some of the things to know about, gold?
Oh yeah. Okay, cool. Think about gold. Gold love order blocks. When it retraces, it comes down into order blocks. They'll rock with a fair value gap here and there, but they love the OBs. Gold is pretty much a straight shooter. You got to understand the climate that we currently in. This is a global traded commodity here, right? So you got countries like China, Russia, a couple of African nations, and some Arabic nations. They're all buying gold right now. A lot of people are panic buying into gold. People are trying to back their currency up with gold because everybody's trying to, get their dominant spot. So people are buying gold. That's next to Bitcoin. So you weigh it up like, do I want gold or do I want Bitcoin, right? Bitcoin a little more volatile. So the people who say, well, gold a little more slow and steady, I'm gonna buy gold. It's proven and been here thousands of years. I'm gonna go buy gold. In the current climate with all this uncertainty, high inflation, uh, just bad times, right? Gold is a winner. It's always pays to go up. Now, looking at the charts, I'm very bullish on gold. Me personally, right now, it's kind of like overextended. I believe you need a breaky break. But yeah, this was the last pullback they had. Boom, they went off, right? And look at it from the weekly chart. See this? They pulled into this OB. That little weekly OB bounce. Last time they bounced, took the highs. They love the OBs. You go down to a 12-minute chart or even a 5 minute, 1 minute. You find your OB, you'll find price action reject. And gold turns on a dime. I will say that too. Gold will turn on a dime. If it hit that right order block, it will turn on a dime on you and go, fuck. Yeah. You can set the block to it. You can set the clock. You be like, boop, boop. All right, so here's a one, this 2 step down OB right here. I think they respected it. Okay, boop, boop. Okay, a little bit. So they came down a little bit lower because you also had some more price action imbalances right here. So you just look for like the order blocks, like the 3 candlestick order block, the 2 step down order blocks, paired with fair value gaps, and you're just trying to see like, hey, what's the lowest possible spot I can get into, right? It looked like they came here to this one. If you find them, shoot your shot. See, yeah, 3 candlestick order block. Ooh, they barely touched it. React. Got in there. React. They love order. Gold love order blocks. I promise you that. Because everybody, that's the thing you got to understand about commodities, right? It's not as manipulated as indices are because it's not 100 companies, 500 companies plus controlling direction of the market. This is, do you want it at this price? Yes or no? Yes. Okay, cool. We buying it here. No. Okay, cool. We selling it here. Oh, that's too much. Okay, sell it down. It's not enough. So buy it up. Right. So those the conditions. There's no if then what. It's like, is it a good price? Yes or no. In between that is negotiations. So when you get to the commodities, they are great to trade because it's either you agree or you don't agree. It's more agreeable and disagreeable to trade commodities than it is indices because when you got politicians like the Pelosi's investing in something and then they come out with a bill that'll bag it up to boost a position. Well, guess what? It's hard to compete with that versus like, no, we're gonna read the OPEC report or we're gonna see like what the rates are doing. Where do I want to get a better return on my money? Oh, gold, simple return. It's just like buying a CD or a bond, right? Either it's gonna do good because of inflation or it's not. So when you get into these simple concepts, that's why these things perform and they typically trend in one direction versus the other. Because you look, when did this thing really take off? So this was Wednesday price action, but let's back out, right? Let's get to a daily chart real quick. Let's look at it. Do 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 do. Boom. After this moment of rest here of consolidation, right? Boom, boom. We're gonna go off the last red candle. That was from the 22nd. After that, it been green, 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 green. Right. So majority of people agree that it's going up. The indecisive days are the days people say, hey, I need to take some profit. Because 9 out of 10, they've been in down since down here. They've been rocking with these bars way down here, right? So you got to look at that and say, like, okay, great. What we gonna do here, right? If they've been rocking with these bars way down here, and you see they got up here, took some profits off. This is minor profit taking. Let's run a fib real quick. Catch this low to this pivot point high right there. Boom. They made a 23% retracement. That's a very strong reaction to a 23. It held support, then break down to a 38 and nothing. The 23 held support, and then they went off. So now that we know they went off, right? Let's go from this low. We just need to understand when they gonna flip again and decide to say, hey, we're gonna pull back. If you look at it, we went to the negative 27, negative 6. We almost at the negative 61. So could we possibly get to 23, 32, 60? Maybe. Maybe yes, maybe no. It's looking a little indecisive right here currently. Are they going to start doing a pullback and try to come back down into these second extension levels, right? These second retracement levels. That's the question you got to ask yourself. Gold is overextended, but it is currently a hot commodity. Looking at the oscillators, they in full fledged swing, except the swing. The swing is like kind of skinny right now. Squeeze, cool, MACD. I don't know, it's indecisive. It's turning white, so I'm not sure if they want to start, turning over. But which way we can check that out? Check the levels, right? So, a quick way you're doing that is look at the last time it turned around. That was up in this ballpark. So, we want to catch the yellow line, put a horizontal line right there, and let's look to the left. Okay, that's a level. 84.60 is a level they like to flip. Oh, wait, look, we got another little line right here. Boom. We currently above that, so let's see how far we can go until we catch something. Looky, right? So we get into that ballpark. Let's bump this one up to here, and let's keep sliding back until we start seeing on our oscillators where is the reversal point for this said market. How long do they like to let it run before it get overextended? And they typically like to flip it. This is something you can do. You can chart out your oscillators to see, like, okay, this is kind of excessive here. When they're gonna bring it back down to reality, right? Okay, right now, this is what we ain't gonna spend all day on that, but y'all get the idea of it. So 145.1 on the MACD is another reversal point. So we can see they possibly get in the zone and see what happens. They could start reversing there. Or are we looking at it? Let's zoom in. Is it showing us weakness on the MACD? It's starting to, we had a little bend here. So depends on what the Asian and London market does. We could see a red day tomorrow or a consolidation day. Just got to look at the news, right? What catalyst gonna, cause them to go into consolidation or gonna go into retracement? But they definitely gonna have to pull back, right? So these things you just kind of pay attention to. I know you you still using your RSI, correct?
Yep, I'm still using my RSI, but it's like it's been up and stuck.
Yeah, exactly. So some of those oscillators, they'll do that. That's why you just got to get familiar with the other ones. You can use a MACD. Still Stochastic will also kind of go up and down, up and down, up and down. But just kind of get familiar with, if you have to use some other ones and kind of see, like, okay, where you're gonna pull it down to. You could also use moving averages. It's not gonna be a telltale as much, but like the MACD is a good tell. When that RSI start to come down, you already know it's gonna be a party then. So just be ready for it. I say this, watch it, wait for it to start, trying to cool his brakes off, because you're at an all-time high right now. That at that moment, you gotta say, like, hey, it's at a high and I'm expecting to go higher. What I'm gonna do, right? Try to ride the wave, or not, but you can scalp it. How can you scalp that? Let's go down. We already know this thing mad bullish, right? So I know you get down on the 1 minute. Boop. This is that. Let's go to the New York. All right, cool. Let's go. Let's mark up the New York and then we'll go back over there, right? And I just say, if it's overextended, you can play the safe bet, which I prefer you to do, is play, play it smooth. This is still yesterday. Okay, great. Consolidation. Stay away from the consolidation. How you recognize consolidation? Squeeze is nice and skinny. The swing ain't doing nothing. It's skinny. MACD got that messed up grill right there going on. So you don't pay it no mind. So when all your oscillators going flat, you pay it no mind. Stay out the way. Let it break some type of market structure, right? But looking at it, right? Red candle, green, green, green. Exit on red. You can actually take profit or average into your position. As long as it don't break market structure, you could have been averaging into that position almost every red candle, and you would have been fine, right? Or this is 12-minute charts too, so these are steep pullbacks on the lower time frames. When we look at it, right? We're just gonna look at the New York. We know you're a busy person, so you ain't gonna be all up in like that. But I'll tell you 2-minute chart real quick. We don't want too many candles. You know how Steve liked to say, red take out green and green take out red situations. So when it pulled down, you hop in on the green, boom. Average in on reds, you would have been very successful today, right? And when you got to this little streak, you could have been taking profits. You already know, work your fibs. 50% retracement, cool. Hop in, right? Taking advantage. So it's in a clear uptrend. You trading with the overall trend. That's how you can take advantage of that with low risk. That is very bullish. Just play the short-term swings in that case. Let it pull back. Use your fibs or use a moving average to catch the retracement back to it. Let's throw some moving averages on there real quick. I got a 520. Right now I got a 5 and a 20 here. So jump out to 5, retrace back down, found support at 20, but also you can use a 34 as another good one. It look like you're respecting the 34, so let's get rid of that 20. So 534, every time it hit that support, pretty much it probably made a 50% retracement here, or hit the 50% EMA. But looking at it, right, long as the 5 above the 34, you could have been taking calls, right, going long on this. Correct? What you think, Melina? Oh, where you go?
Oh, sorry. Oh, yeah. There was like this massive push up on NQ. I don't know if you noticed it. So now I'm trying to short it. Sorry. I was listening to it though.
Nah, you smooth. All right, now. But yeah, so those the things. If you see something overextended, you can scalp in the direction of the overall trend. That's the safest thing to do, right? And when it's not, or for sure you're coming from a reasonable location and all oscillators reset, then yes, you go look for the day trade. If not, then scalp it. Don't fall asleep at the wheel. Scalp, moderate risk, and you can get a nice green day.
Well, that's what I did today, right? So then I saw that it was like, I saw just like a small little pullback or whatever. So when I look at this, it's bull flag on bull flag on bull flag. So as soon as you get a small pullback, jump in and go up. You know what I mean? As soon as you see a tweezer bottom or something, just get in. Or you see like an actionable signal, get in and just ride it up. So I wrote it up. And then sometimes when I saw that it kind of hit a high point, then I said, okay, let me write it down. And then it's just like up and down. And I'm like, when is this going to stop? I'm like, or is this like, and then I just zoom out and I was like, yikes. I'm like, this is crazy. So I was just, I'm trying to like,
trend.
yeah, this is the trend.
So that's the whole thing about the commodities is they are not as wild as the Nasdaq and its friends, right? So when you hop in, that you catch the overall trend, that you went to the 1 hour chart or even the intraday chart, your 15-minute chart, you'd have seen like, hey, this was a bullish trend. All I had to do is just find a good entry, and after that, I can just sit back and kick my feet up because it was gonna run. If you just look at it from, if you would have caught that low, you didn't have to catch that low, right? This long position, your entry was this high. You say, hey, you break that high, cool. And you would have held, what was the high we got to? Boom, here. All right, that's 212 ticks. It you would have just held, right? Of course, it went up higher, but this is the operation of the market. I know you're gonna have other things to do. You ain't gonna want to sit around here all day long, right? So you could have set your profit target and got out the way. You know, look to your left. But since we had all time highs, that's when you want to get into your fib extension. So you would have grabbed, where you go, right there. You say, okay, cool. Now I got a little price action going my way. Let me catch these little swing points. Okay, great. You can go 100%. You can go 27, 161 or above, right? But you would have targeted the 161 fib. That's still 184 ticks. That's a great day at $10 a tick, right? So you can stay smooth like that and take advantage. So those different things you can do, especially if you got a nice trend, you can plot that out. That's why they use the fibs and the fib extensions, because those are trend based tools to kind of help you catch those and see your targets.
No, thank you. I appreciate that. Yeah, I think
Oh,
I
my
wrote it today
pleasure.
and I had like 100 ticks, and then another time it was like 30, 40 ticks, and it was all in like the paper trade, because I said, okay, everyone's been talking about it, let me try it. And then after I saw it, I said, Jesus, I need to get in this for real.
Yeah, it's one of those things. It moves fast when it does, but in most cases, it's taking its time setting up. It don't move every day like this. It probably have a couple of days. It may go sideways. You just go back and back test. As you seen from the chart, you get a lot of dojis, right? That's them consolidating, trying to negotiate a fair price to get in for the investors so they can get a great return. So during those times, you just kind of plot, wait till it want to break out, let it get to a certain key level. Once you get to that key level, you take advantage of it, right? Look for the order block, look for the gap, look 40, 50% retracement on the fib. Look for that and then go for it. That's all you can do. Yeah.
Thank you.
Yes. Oh, you very much welcome. All right. Anybody else got a chart y'all been contemplating on? You've been looking at anybody else?
I caught that drop at about 12:30 on the futures for the S&P, the E mini.
Yes. Oh yeah.
I had
The
five
ES.
contracts.
Oh yeah.
Yeah, so that was a
Oh yeah.
nice little move.
Oh yeah. You
I
was eating
caught
up
the
that.
whole thing. It went to about $1,200
Oh,
with five
congratulations.
contracts. Yeah, I was just sitting there and I
Congratulations.
saw it turning, and I was like, "Oh shoot!" And I had five contracts ready to go, and it dropped all the way and kept going, and I got right out at the bottom with 1,200.
That's what I'm talking about. Way to
I've never
exit.
traded gold. I traded oil a little bit earlier this morning, but
Hmm.
I'm going to definitely be looking more at gold and oil, and I'm really just getting into futures the last 6 months.
Yeah. Well, take your time. There's plenty to see, plenty to do. Just enjoy it.
Yeah,
Enjoy
yeah,
it.
man, that money add up a whole lot faster.
Hey, listen, it's a, well, how they say it, it's a gift and a curse.
Exactly.
It's, that's how I look at that. It's a gift and a curse because it comes fast and leave faster. You,
Yeah, I like to trade on the drops because I feel like I do better when it's dropping than when it goes
Mhm.
up. I can make. I feel like I can make more money on if I catch the market falling.
People like bad news, so their nerves are bad. So they say they panic sell. That's why. That
Yeah,
trust me, I'm a bear too. So that your primary trading nature is bearish. You like the chaos.
right, right. Well, man,
Yes.
excellent charting class. But yeah, that's why I traded today. I traded that, and I've been in the oil. I've been trading XOM. I
Mhm.
took some 115 contracts. I bought them on the first 365 and took them almost to $800. I still got
Oh,
one
nice.
in the money, 115, and I got one out to January XOM. It's up 100%. It's the 140 strike, I think it is.
Yeah. Oh yeah, you holding on smooth. Cause
Yeah,
summertime about
those
to
are
kick
doing
up.
good.
So thing about it is people are getting the inventory in so they can take advantage of the summer increase. The thing about that's the whole purpose of the futures market, right? Is for people to lock in fair prices at a good time. Nobody playing the last minute. Maybe the average day person do, but if you start getting the habit of planning in advance, that way you can lock in and say, all right, this is how much we can charge for these flights because this is how much it costs us in fuel. They buy the stuff a month out, 3 months out, a year out to lock in good prices so they can control their bottom line. If they pay the day-to-day prices, right, then they'll be screwed. Each one of those futures chart, even gold, operate on the month-to-month. Crude oil operates on a month-to-month contract. That contract expires every month, so you got to switch contracts. So it's always the next month over. The prices you're currently trading are next month prices. That's when you get the news report say, "Oh, price of oil went up to this." No, it's not. It's up here because that's the future price that you're trading. Now with Tesla, it's honestly forming a nice little pennant. It's like a falling wedge right now. I'm gonna see prices currently tightening up, but look like we can probably potentially get a falling wedge going on. You see how it's just tightening right there. So you can probably get a falling wedge. And if that do play out, right, it's almost the opposite of a bull flag. So you don't want to actually, hold on, drew that in the wrong spot. So when you're looking at falling wedges, because it's at the bottom of a downtrend, right? So you take the distance from the high to the low, grab that little nice little tool there, and you look for your breakout point. Boom. That should be your measured move. That's if this play out. It ain't nothing until it break out and play out. All right. So until this thing break out of this trend, it's nothing. It's just bearish price action. It's going to the dirt. Currently, it look like it's a falling wedge on a weekly chart. I would like to see this oscillator on the MACD start picking up. Let's see what the daily chart look like. Do 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 do. Yeah, they already picked up right here. Right. So keep your eye on this right now. See how the MACD is already flipped below the zero line, the swing below the zero line. MACD skinny is felling, right? But pay attention to where you're currently sitting at. That pattern still in play. You just gotta watch it. They got earnings coming up. So if Elon can pull something out, I'll rabbit out the hat, that wedge can play out. That can be a catalyst for it. If not, well, guess what? To the dirt it goes. All right. So this is the channel that is currently trading in. It's tightening up. Anytime something tighten up, you get a consolidation breakout. It may be good, maybe yes, maybe no. It can go either way, right? But definitely knowing Tesla, it get to a very good price. They'll love to have it. You know how them boys love their Tesla. Yeah. This is a little 155 support level. They've been here before. Yeah, they. Yeah. So keep your eye on them. But definitely, I want to see what happens. They take that low, just know there's more bearish intention. If they choose to hold it here, then you ain't gonna get your new lower low, right? So this is your lower low currently. 160.68. Put alert there to see if they'll take it. If not, they start rebalancing price. They could be running highs to come up here and actually do the breakout. But if they break down, that's a new lower low. This will be a lower high. But in the current moment, they halting and they starting to pull up to rebalance. So just keep your eyes on Tesla. All right. Indy Spy. Yes. Look at that tech. We'll look at that next. Little spy running. Yeah, you did have a gap down Tuesday morning, but they trying to recover price. I think SPY overextended. Oh yeah, look at that. Look at that. Look at that. Yeah, that's cap right there, my boy. Yeah. Let's go down to that 1 hour. Uh-huh. Let's see what they talking about. Mm. I see it dropping. Cheese be sliding on the floor. Boom, boom, boom. All right. So trading the SPY, trading the NASDAQ, keep your eyes on a top 10. Always chart the top 10 on Sundays or Friday, whichever way it goes. But make sure you keep track of the top 10 holdings of the SPY and the QQQ. You keep track of those. That would help you with your direction. If you're trading the SPY, you must understand what the SPY is made of, right? It's nothing but an ETF. ETF for the S&P 500. So track the top 10 holdings to give you an idea of where price is going. If they're doing bad, the SPY going to do bad. And trend, you know, in the same sense, so is the NASDAQ 100. So that's why I have a nice little SPY top 10 list. Currently, everybody doing green except JPM. I think they kicked them out. Oh, the top 10, I think they moved to somebody else in place. I got to go check again. Make sure you keep up to date because the bottom holders, the bottom people on the bottom 10 and 9, they normally get replaced. So always keep that in mind. So you got to always go back and check and see if they rebalanced and moved them down the list, right? So JPM could be gone. I can't remember who they replaced them with, maybe Adobe. But Tesla's, Nvidia's a big holding of theirs, right? Not so much on Tesla, but you see the boys who they holding the most. Now, who currently holding the most up? Microsoft is making them do bad. Everybody else is keeping them up afloat. So that's why you got this indecisive move right here, right? If we go back to the daily chart, because this is what they closed as, right? Boom, we got this nice little retracement, but a wick at the same time. So they fighting. If majority of the top 10 is green, guess what? Majority wins. You only got 3 reds, and they ain't red by much. So they're gonna push the market back up. Vice versa. All right. So that's a little nitpick. Take that with you. Do what you want with the information. Let's make your top 10 watch list. You can go to Yahoo Finance, go to holdings. They'll show you what is currently in the top 10 of the SPY in the QQQ or any ETF, and they'll show you by weight, like how much they are weighted into this position, and it'll help you out. All right, let's look at this next chart. Let's see. Okay. Hey, what this company do? Good. Is it? How you say your name? I don't want to mess it up. I probably already did, but it's what it is. Oh, they pay dividends. Oh, 9 cents. Okay, they all right. All right, what they do? Energy. Okay. Let's look, understand these resources over here on this left hand corner. Okay. What they specialize. Oh, okay. Here we go. Still making coal, copper, zinc. Oh, industrial products. Okay. Canada, Peru, US, and China. Oh, no, Chile. Born in 1951. Okay. Smooth. I think it's F. With them boys. Let me go to my go-to list. I actually have another mining company I like. Go to place. What yet? Yeah, LCX. I like those boys too. They're around the same price as you see. They 49, they 48. They're around the same price. They do the same things. I believe LCX last time I was holding it, they was pretty up there for us. They for as mining minerals and all that good stuff, gold, copper, all that. So you want to know gold and everything is running up. FCX get you that exposure to as well. All right. Let's do an overall breakdown because I don't know nothing about these folks. So we're gonna go start it from the top. Okay. There you go. Okay. Boop boop. Boop. Okay, fell from glory. Boom. $65.59. A nice little double bottom going on there. All right, let's find some support and resistance. Resistance. All right, that's support right there. I'm gonna change that. Okay. All right, let's go down to the 1 month. Boom, boom. So you don't know it, I'm gonna tell you, I like to start at the 3 month chart to kind of get an idea of what the market is doing, to really get a grasp on the the price action. Then also look for a level of support resistance. It also helps you get less candles. You kind of get up there real quick, right? So boop, boop, boop. If you don't know how to do support and resistance, you're looking for, you can do candle bodies or you can do wicks. I do wicks. So you're looking for 3 touches, right? As long as it ain't a body, I don't count. You can't cut through the body. If it cutting through the body, it doesn't count as support. This is right here. They react to the zone. So this is 3 touches. You can drag it down and say, okay, cool. This is closest to the most reacting point. So yeah, definitely support, as you see, support. And it's a 1 month chart. So that's mean it's a very strong support at this level here, right? Same thing for resistance, 3 touches. And that's your resistance, right? So they just broke out of that. You want to take it up a notch, that's resistance, 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 boom, resistance. So they know this zone here from 44 to 37, a very strong resistance, right? Next level you want to watch out for, if you want to get a strong breakout, they need to take that high of 49.45. I would like to see them take that high so then they can come back up and revisit these all-time highs, right? Get some of that volume and balance out the 1 month chart. So let's say if they do make that retracement, let's see where they currently sitting at far as retracement wise goes. So we're currently sitting at a 65, approaching the 78% retracement. 78% will be at the 52 mark, right? So keep your eye on this. If they're gonna turn, they could turn here. If not, you need them to take that high so they can kind of revisit all-time highs. Look for news articles about if they're acquiring new businesses or they found a new supply so they can kind of gain market dominance, what deals they got in the works, who they partner up with, and how much they offloading. That's what you want to keep track of. You looking to hold this long term, you got to get in a personal business, right? On a 1 month, the MACD is turning up, so they trying to get more bullish. Let's go to the weekly chart real quick. Yeah, they just taking off. So if they can get through that high of 49.45, that's a clean breakout to the upside. They're gonna be rocking and rolling, right? They already got to change a character here, internal change of character, and a little almost external breaker structure, but this will be the true external breaker structure up here. Last time they got that was a false breakout, and he shot it back down. So just keep your eye on this key level. If they cannot take that level, well, you already know they're gonna return back to lows. Let's keep that in mind, right? Boom, bada bing. So, I got that, people. Are you very much welcome? With certain one of these mining companies, plan ahead, or you get some news, they're gonna come out. You understand something gonna affect something else. Always plan ahead. Look for the niche. Look for what affect what, and see how you can take advantage of it. Can you buy leaps into this, company or this specific company that, operates like XYZ? And if so, cool, great. If the shares are cheap enough where you can get your little strong position, great. If they don't pay dividends, you can afford to get 100 shares or something. You can always do cover calls off of it, right? That way you can kind of make some of your money back while you're holding this said position into that direction. These are all strategies you can use, or you can do poor man cover calls by getting in the money contracts and selling positions off of that, right? Please consult with your broker. for the details that you need to know, right? Those are also strategies you can do with companies like this if you want to, lower your risk and kind of get a good return. One of the good brothers on the call, he did that with this chip making company, killed it. That thing took off. Boy, it took off. Boy, took off. Like bare feet on the concrete during the summertime, he took off. Yeah, trying to tell you. Now, get how you live. But do we have any last minute questions before we wrap this up? No. Questions, comments, concerns. If not, leave them on the video. Go on here, give your boy a like, comment. You ain't subscribed, please subscribe. You already know, show your boy some love. I operate off of likes and comments. You feel me? Yeah, that's all the donation. That's form payments I take is likes and comments. If you're gonna help your boy, I really appreciate y'all very much so. As always, you know, this is Sauce Factory Wednesdays. You already know.